G'day everyone, welcome back to Pete's Investing. Today is June the 6th, 2023. This is the New Zealand Canadian dollar currency update. On our weekly, we're in a bearish momentum, but on the daily, we've broken up into a neutral with this little bull candle that's appeared overnight. So let's go through each of these. Again, both the moving averages of the price chart and the moving averages of the CCI 150 are in a decline, so it's giving us this bearish signal. So predominantly bearish trades on the lower time frames. On the daily, we did have these diagonal trend lines and this channel here that where the price was bouncing in between, these descending channel. It's also initially was this minor support level at 81.18, and we're going to move that as a solid support level at this point and remove this one. So we're going to get rid of that dotted line and move that as a hard line in terms of support. There's no guarantee it's going to bounce up from here and make a full recovery, but at the moment that's what the indicators are showing. And again, this daily indicator down here with the CCIs and the moving averages are showing a neutral position. So if it breaks above this diagonal trend line, you can see it there more closely. It's sort of hugging that diagonal trend line. If it breaks above that, it's going to give us a bit more confidence. Looking at the hourly, again, you can see that more closely. It's just really stuck to that diagonal line, that dark blue line. So we need to see it break much higher than that to be more confident about going long. But again, as I said, we want to see the weekly and the daily align in the same direction before taking the same direction in the hourly trend. You can take the if this breaks up into a daily, into a bullish momentum on the daily, you can start taking long trades on the hourly. But again, your probability of success lessens unless all three timelines align. And looking at the hourly in a bit more detail, if you want to zoom into the micro levels, what we can do, you can see, if I zoom out, you can see what it's doing there. But this initial previous high and this low, you can actually draw a Fibonacci to see if it's actually breaching that 61%. And you can see that 61% is actually pretty much aligned with that diagonal descending line. So if it breaks much higher than that 61%, then there's a good chance it's going to continue higher, although there's no guarantee, of course. It could always bounce back down, but that's generally a key area of a reversal. So that's at the micro level if you want to go that far and try and digest what it's trying to do. So to understand, and also before I go on, I've also got this long back test and actually a short back test as well, showing you how the price and the profitability is performed for each of them. So you can see here during the long back test, the price was averaging down. We don't use stop losses during the price decline of the price chart. And likewise, when the price was moving up, we had a bit of a drawdown as well on the short back test. And to avoid those average downs, as I always say, making sure the weekly and the daily are aligned. So for example, back here when the price is declining, you would avoid going those long positions. That's back in around May 22. And you can see there, go back to May 22. There's no long positions on the daily. Likewise, May 22, there's no long positions on the weekly. So you would have avoided taking those long trades, and likewise during that period on the short side, and that would have been around November 22. Again, primarily long trades November 22, and primarily long trades during the weekly stage as well. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page, where we also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you next time.